Have you seen the headlines? BlackRock, the $10 trillion giant, is pulling its money out of America. At least that's what some viral posts and videos are claiming. It sounds terrifying, right? A $10 trillion warning that the US economy is about to collapse. But is it true? Is Larry Fink, the CEO of BlackRock, really betting against the United States? Today, we're going to dive deep into this story, separate the facts from the fear, and figure out what's actually going on. This is a big one, so stick around. First, let's understand who BlackRock is. They aren't your typical company. BlackRock is the world's largest asset manager. Think of them as a massive investment firm that manages money for millions of people and institutions, from your neighbor's retirement fund to huge pension plans and university endowments. They invest this money across the globe in stocks, bonds, and other assets. Their goal is to grow their clients' money. So, when a company this big makes a move, people pay very close attention. The idea that they would suddenly pull out of the biggest economy in the world, the United States, is a massive red flag. The panic started with a few key pieces of information being circulated online. The main one is a statement from Jean Boivin, the head of the BlackRock Investment Institute. He talked about a new regime of market volatility and said they were underweight on developed market equities, including those in the US. The word underweight sounds pretty bad, doesn't it? It sounds like they're selling off their American stocks. This was quickly spun into sensational headlines like BlackRock ditches US stocks and the great American sell-off begins. But here's the crucial context that gets lost in the panic. Underweight is a specific term in portfolio management. It doesn't mean selling everything. It means you're holding a slightly smaller percentage of a certain asset compared to a benchmark index, like the S&P 500. For example, if a benchmark index is 60% US stocks, an underweight position might mean holding 58%. It's a small, tactical adjustment, not a massive retreat. Think of it like adjusting the sails on a ship because the wind has changed slightly. You aren't abandoning the ship, you're just making a small tweak to navigate the current conditions better. So, why did BlackRock make this adjustment? Their reasoning is actually quite public. The BlackRock Investment Institute pointed to several factors. First, stubborn inflation. The US Federal Reserve has been aggressively raising interest rates to fight inflation, and BlackRock believes this will slow down economic growth and could potentially hurt corporate profits. Second, geopolitical risks. The world is a more uncertain place now than it was a few years ago, with ongoing conflicts and shifting global trade relationships. Third, they see opportunities elsewhere. This brings us to the second part of the viral story. BlackRock is shifting its money to China and other emerging markets. Again, there's a kernel of truth here. BlackRock has been increasing its exposure to certain emerging markets. They see potential for growth in places where economies are developing rapidly. But this isn't a simple America out, China in swap. It's part of a global diversification strategy. Smart investors don't put all their eggs in one basket. They spread their investments around the world to balance risk and capture growth wherever it might be. Let's look at the numbers. Does BlackRock still invest in America? Absolutely. A massive amount. The United States remains, by far, the largest single country exposure in their portfolios. If you look at their major funds, like the iShares Core S&P 500 ETF, it's literally a fund made up of the 500 biggest US companies. They manage trillions of dollars invested directly in the American economy. The idea that they are pulling out is a dramatic overstatement. The reality is a minor rebalancing, a slight trim here and a small addition there. So, why does this story get so much traction? It plays on our fears. Economic anxiety is real. People are worried about their jobs, their savings, and the future of the country. A story about a financial titan like BlackRock abandoning the US economy confirms those fears and generates a lot of clicks and shares. It's a powerful narrative. But powerful narratives aren't always accurate. It's much less exciting to say, BlackRock makes minor portfolio adjustment due to inflation concerns. But it's a lot closer to the truth. Another angle to consider is the political one. BlackRock and its CEO Larry Fink have become lightning rods for criticism from various political sides. Some criticize them for their focus on ESG, environmental, social, and governance, investing, arguing it's woke capitalism. Others criticize them for not doing enough on those fronts. When you're a $10 trillion company, you're going to be a target. This story about them abandoning America fits neatly into some of these pre-existing narratives, making it easy for people to believe without checking the facts. So, let's put the $10 trillion warning into perspective. It's not a warning that BlackRock is abandoning America. It's a signal that the investment environment has changed. We're no longer in the era of super low interest rates and calm, steady growth that we saw for much of the last decade. We're in a new regime with higher inflation and more uncertainty, just as Jean Boivin said. In this environment, asset managers like BlackRock are being more cautious and selective. They are adjusting their strategies to navigate choppier waters. What does this mean for you, the average person or investor? First, don't panic based on sensational headlines. Always dig deeper and look for the context. Second, understand the principles of diversification. The same logic BlackRock uses, spreading investments to manage risk, is a good principle for individual investors too. Third, stay informed about the real economic trends, not just the scary stories. Yes, inflation is a challenge. Yes, the economy might slow down. But the US economy is also incredibly resilient, innovative, and still the largest and most dynamic in the world. To sum it all up, is BlackRock pulling its money out of America? No. They are making minor, tactical adjustments to their massive global portfolio in response to a changing economic climate. They remain one of the largest investors in the US economy. The $10 trillion warning is not a signal to run for the hills. It's a reflection of a more complex and volatile investment world. The real story is less dramatic, but far more useful. In times of uncertainty, careful strategy and diversification are more important than ever. It's crucial to get your financial information from reliable sources and to understand the nuance behind the headlines. Fear sells, but knowledge empowers. Thanks for watching and taking the time to understand the real story behind the hype. If you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into the stories that matter. See you next time.